Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian own nothing, control everything. Thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in the replay. This is the vault, episode 616. Getting up there. And just want to thank everybody for listening throughout the years. We do our best to find a happy medium between long enough and too short. So we appreciate everybody for tuning in live, listening to replay. This is the Vault, episode 616. Private equals equity versus public equals debt. We know we did an episode recently that looks similar. This is a different episode. This is episode 616. Private equals equity versus public equals debt. Of course, this could be a long winded subject. We're just thankful to have whoever tune in live, listen to replay, hit the like, hit the subscribe button. Definitely have a workshop coming up here, and what is that? What is that? October 26th, and we're doing it in Chicago. So we would like to say that it's not the Windy City, but it is. And so we do have a private banking specialist. And so you're going to see someone that's learning right there with the master right there, quote unquote. The founder of the Money Multiplier, Brent, is coming in. And we're always going to be talking about the important details, trusteeship. You could call it a trustee training, really doing it for a private family. And so you can book yourself into that. If you're a listener at the Vault, you want to tie in, we got Dr. Bay speaking. Definitely look forward to having others hear Dr. Bay speak. This is one of those ones that we say it is definitely pretty sweet. We're definitely excited about this one as well, and all of them moving forward. This one in particular, once again, just trustee mindset. Going to be going over the training traditionally for the family, so we're going to have an open set, and we can go over some things with some families like we did in Atlanta. So looking forward to connecting with the families in Chicago. Feel free to reach out, Christian at trustchristian.com. That's the email, Christian at trustchristian.com, or you can hit the scan. Feel free to reach out. Look forward to hearing from you. So here we go. Private equals equity versus public equals debt. This could be one of those what you call long-winded episodes. We're not going to do that. But what we are going to do is give some of our perspective on what people consider private equity right now. They think it's the same thing. Private, just because it's private doesn't mean it has equity. Equity means it has value. But oh no, no, Trust Christian, I'm gonna start a private equity firm, Trust Christian Vote. I'm trying to be a accredited investor. On the public side or the private side? You gonna do that through a public debt note, or you gonna do that through where other people have appraised the property, where there's common insider share value? Oh, Trust Christian, what you mean? What are we talking about today? We're talking about what is private. It should be equal to equity. Now, how many people actually have hard tangible assets that they can put up as equity in a private raise? Because that's what's being raised privately. It's true equity. Oh no, what are we giving out? Private credit too? Sometimes we see it. They're giving out debt. So let's talk about the public side. That's what it's issuing. Debt. Now, for all the capital markets geniuses out there, they're going to say, of course it is. All of it's OPM. Right. But what happens when you come back to the private? Is it OPM in the private, or is it your family capital? Or is it OPM? Is it private credit now? Oh, Trust Christian, what level are we talking about? You want to talk esoterically today? Are we talking about the private just being private contracts? Or is it being conflated with equity? Equity means there's something of value. that other people find of value, whether it's a product or a service. So we got a squad, a team of people that think, oh well, if if it's going to be private, it's supposed to be private equity. It's supposed to be private equity now? Who made that rule up? Who made that rule that it's got to be private equity now? Alrighty. So we're right here. Back to the public side. Or the public side. Well, Trust Christian, what is public? What is private? I'm pulling in the government name because that's private. I don't know that it's public. It's a debt note. Hold on, Trust Christian Vault. I do know that it's a debt note. Okay. Is it private equity then? Is it private? No. So there's no real equity in it. It's just a debt note from the inception. Oh, so is the common public dismissed by not knowing contracts and the verse of it? And incomers? We were talking to someone. We would like to think this keeps our channel going. So we were talking to a gent, and we talked about how when you live in a capitalist system, it pushes freedom. It pushes getting betterness. It pushes on focus on education. It focuses on some pillars in the society, which you call the liberal arts, because it takes a team to make the dream work. That's what free market capitalism has given to the world. So sure, out of the private, they still want to say, oh, well, just Christian vote, does that mean I have equity? Well, okay, we're sitting here talking to people in the private, whether they want to be in the private or not. And most of them are not from the private, they're from the public. So you're now dealing with that mindset. And a lot of people in times we're living in talking about, oh, I'm going to get some money from private equity. Everybody nowadays is like the cup of tea, like, oh, I'm going PE, I'm going private equity. And to hear this type of mentality of just, oh, I'm going private equity, it's easy to be dismissed. You might as well say, oh, I'm fighting for less than 200 private equity firms in the United States or less than 2,000 private equity firms. So there's more banks than private equity firms. Why would you not go after the banks? But people will say, oh, I'm going to go get private equity. So private equity means you have equity to give. So we sit here, we talk to these entrepreneurs. They be like, "Oh yeah, I'm gonna give us some private equity to a private equity." Well, how much you giving up? Now look, y'all think y'all can listen and type the answer back into the chat, but we already know the answer to the question. You don't want to know how ugly it can get. It's supposed to get uglier than the number that we're going to give. But this is a number that they give in the public nowadays to make people feel good, to make people sound good, so you don't feel bad that they're taking more than a third of your company. So here we go. First of all, most of the time, private equity wants more than a third. Let's establish that. Now, recently we had one entrepreneur in the past 24 to 48 hours wanted to send over the 27%. 27%. So then they sent over, oh, I'm going to do a 27% and possibly in some years, well, it don't matter. Look, it don't matter if it's 3 to 5 years. Okay, we'll say 3. 5 years to convert to a debt? What type of waters do you think we're living in, ladies and gentlemen? What type of environment do you think we're living in? Private equity has been getting 16 points on investments for years. Almost could say 21. And they would almost like to say that in down cycles. But of course, they're going to promise above average teens, mid teens returns. They would like to tell you they have a quality internal rate of return. We would like to think that, ladies and gentlemen, the private equity has done what every industry has done. It's had its ups and downs. Fair enough in the past 20 years. Private equity now is coming for people's companies. Always has come for people's companies. Now, you all don't want to know. The general public doesn't want to know that private equity wants 40% of your company, minimum. And they want a board seat. They want decision making. They want voting rights. See, the see how I don't want to be an average trustee trust Christian, but who has voting rights matters. They want voting rights. The sure. You say, oh, trust Christian vote. You might as well call your best friend if you call him private equity. You call him private equity, you're calling what's going to be. Now, say they come through and do a clean slice on you. Private equity comes in and they say, hey, we're taking you out. This is going to be less than a year buyout. Do you hear those type of mentalities? So you got your paperwork ready. You got whatever business they have they're going to buy from you. And that's how it goes, ladies and gentlemen. Now, you can be in the public and be a public debt slave and try to play that hamster wheel. And oh, yo, I'm going to try to get public debt and on my public name and try to get, get my public 700 credit score. Or you're going to go to the private game and you're going to go to private equity and it's going to be private business. And people are going to figure it out. Was it that hard, Trust Christian and Vote? Maybe it sounded like it, didn't it? It sounded like that, didn't it, trustees? We know y'all connected. Y'all know it sounded a little hard. Oh, Trust Christian, it sounds so hard to be public and private at the same time. I'm trying to get my gears in order. Nah, you got to get your mindset in order. You got to get your emotions in order. You got to be prepared to play the game every day. 1 foot, 2 foot. It's that stuff. It's the basics. Trust Christian, I'm trying to make these quantum leaps in trusteeship. Ladies and gentlemen, we've seen this environment. Wealth, generational wealth is about grooming. It's as simple as that. You gotta be willing to sit in the room long enough to see your heirs come in the room. Many maybe don't see that, but for the most part, you gotta be willing to put in the time to see your heirs come in the room. So when the heirs come in the room, they know who you are. So we're either talking about the private equals the equity or the public equals the debt. Now the public equals the debt. That's the public stuff once again. Trust Christian, I don't know about this public debt. It's so intoxicating. It's so intoxicating. Think about where it got people at. And then you say, okay, that private equity pool, I don't know much about that pool, or I'm looking to dip in that pool. But Trust Christian, I'm trying to jump in there with some equity. And they used to say sweat equity was that, and then they try to say sweat equity wasn't much. But at the end of the day, it's the equity. It's the equity. What's the equity? The work. Did you just want to see it manifest in the work? Did you want to see the private equity manifest? Like, how do you think the private equity is going to manifest? You got to get around the private people. This is where people got to submit their ego. Why? Because they thought the people in the public that made it look shiny, that wore new outfits every time they seen them, was the ones that was winning. Then we'll see the ones, they got the rubber soles on their shoes beat up. But at the same time, they showing up being the first at the events, being almost the last to go, putting in long hours, networking, Once again, standing on the floor, connecting with people. Once again, having to be the face of the company. This is what you see. You Simple as that. They not wearing new suits every time we see them. Some of the best in private. They got basic suits. They almost only wear those suits at those events. There isn't that many of them for those guys. Oh man, I think I need to buy new clothes. See, the private equity might chew them up and spit them out. Why? Because they're not ready for accountability. See, they don't want to know that the private equity is upholding the countries and all this other stuff. Because when they jumped into the private equity, they got to be honorable too. When they say they got weapons, they won't use them. When they say they going to honor the contract, they do it. That's what happens in the private. So it comes down to the mentors even almost call it your pedigree. Now you sit there and you hear that word, you be like, oh man, I know some coaches, they hear that word, they know what time it is. What's your pedigree? And it comes down to those type of things. Sometimes people gotta lift their pedigree up. They gotta smarten up they breed, they pedigree. It's interesting to see the private equity market, when we talk about it. Because you would think that if you supposedly own the property, you would put it in a position where it's private. So that's private equity. But oh no, no. How many people have missed their opportunity at private equity to now find out the benefits of, oh, we have an asset. It's more than a quarter of a mil. It's more than half a mil. It's a mil. It's more than that. People want to talk about holding assets though. How much more could we get for private equity if we held it in a private equity position as opposed to a public position? Do we know that? Then do we know the right questions to ask? Do we know the right banker to go talk to? Because at that point, it's not a mortgage, it's not a public debt. What is it? It's a private equity loan. It's some type of private equity situation. The private. It's one of those things we want to talk about for weeks now. Because what's so challenging about it? What's so challenging about saying, you know what, I don't want to hold things in my name if I have a name, because then that makes me liable. So that means it's public programming first. Okay. Then where are we going after that? The management skill set? Oh man, I gotta learn. We all ran into the learning curve. We all ran into the learning curve. So what happens? That means you got to get a mentor. So you can reach out, Christian at trustchristian.com. That's the email. We're doing a workshop in Chicago. People can reach out, Christian at trustchristian.com. Why are we doing these things? Because some families wanted, they understand the private sector more than the public sector. And they care to be in the private, dealing with equity. Sure, we vet them through the public. Look forward to hearing from you and seeing you. We've been wanting to talk about this subject for weeks now. Oh man, Trust Christian, I'll be wondering, when am I gonna go private? You gonna go private when you start putting your name down with equity on it. Instead of putting it down as a debt instrument that's unrestricted. Everything in the public is a debt. So it's unrestricted. People can use people's copyright and then they don't always win that fight. The public deals with a debt. It's pecuniary in nature. Okay. So where we at with it with a private then, ladies and gentlemen? Like, ladies and gentlemen, trustees, it the mentors were not easy on us. See, I gotta understand. The mentors put on us, you let your bigger goals happen today type mentality. That means there is no tomorrows. That what do we gotta do today to make the bigger goals happen? So those usually and put your mindset to your ultimate goals, which was to be private, financially, independently wealthy. Wasn't public. Wasn't Fortune Forbes. Yeah, yeah, assets are listed out in the public. Here we go. Private equity. Well, speaking from a high level, private equity is pretty much a straight shooter. These are teams, of course, that they can lose. They do have high educated people. They miss. Of course, they are part of every great financial crisis. These are firms that have capital, literally cash on hand, and sometimes they're getting capital from other companies and lending it out as well. We've seen that market as well. We are in that market. Um, at the same time, when we're talking to trustees in the model here with trusteeship, ladies and gentlemen, even if the insurance is private equity, where is the mindset at? Even if the insurance is private equity, where is your mindset at? Okay. And so when we talk about whether it is insurance, whether it is real estate, whether it is various different things, private equity has dominated the day for returns. For sure and over the public markets. We could easily say that. Like, if the public markets is giving you a double digit return, the private equity is giving you the upper double digit returns while the public is giving you lower. Now, that's not a quote, that's just an analogy to give you an idea of how, for sure, private equity, not every company, of course, but the median has outperformed. Why? Because the market is a lot more aggressive when they win, and there's not that many of them. There's way more public banks than there are private institutions, at least like private equity firms. So they have various different firms and different types of firms. People say, oh, they got angel investors, they got VC, venture capitalists. These are different quality style of investors. Private equity, they're very, they don't always invest in what you now see VCs invest in, which are venture capital or angels. They'll invest in pre-seed, pre-revenue. They'll invest in those things, whereas private equity doesn't always invest in the pre-seed or seed rounds, at least early stage. You'll see them come in and get in at different stages, and they come in and buy. They like to have a different. They have a different type of acquisition model. So interesting enough. It's very interesting. So when we see people saying nowadays, "Oh man, I gotta do something with my life, trust Christian in the vault. I gotta do something with my life as a trustee." Hmm. Are you gonna sell off the private equity, or are you gonna sell off to a public debt? Take your company public and sell off and get some public shares and get some public debt notes. Hmm. That's the market that we see out here. Are you selling off the private equity, or are you selling off the public debt? Going off in public. And you would think that the public would be harder, right? It is almost. It's way harder to you can get more scrutinized. Whereas private equity, they're buying cash flow. They're buying assets. Your family, you're buying assets. You're buying cash flow possibly. Same thing they're doing in private equity. That's what we see right now. Well, okay, public debt. How many companies do you even see going public nowadays? How many companies do you see going public, trying to go public in less than 5 years? They're not taking all them scrutiny chances. That means we got to double down on paper. Oh, here we go. We got a story to report. So here's this company. Supposedly, this is the reason why their independent board stepped down. Independent board, ladies and gentlemen. It was a private company, and supposedly because the founder doesn't want to take them public and wants to keep them a private company. Supposedly the company 23andMe, which is like, so it's a company, it's on the internet. Literally the whole board stepped down. Supposedly it was like it's more than 3 or 4 board members on the independent board. Now maybe not their full-time board, but their independent board, their outside board. Literally. That's what we're talking about now. You got independent board and they stepped down because somebody doesn't want to take the company public, which means they don't want public debt to control the company. They are looking for their private equity exit. This is what happens in the world, ladies and gentlemen. And this is where we are in the world, ladies and gentlemen. So for the trustees that say, oh man, I'm just Christian, I'm going to go private equity because I got equity in my birth certificate. I got equity in uh, my name, my signature, their signature alone, like they some royal or something. So they're already saying that there is a royal class. By you saying that your signature is a royal signature, you're saying that there's a royal class. Right. So that means that what? There's this debt class or there's a debt instrument. There's debt instruments, but what about a debt class? You see that? Are you in a royal class that, oh, your signature is different than another human's? Here we go. Let's have those rainbow conversations. Private equity says money, money, money. It doesn't see those things. It sees value. Remember, that's what we talked about in the beginning. It's not about the color, it's about the value. That's what is being exchanged in the private. So do we see the value? Is it not the signature? It's what? It's a lot of things. It's really an appraisal more than anything. You got to have a good appraiser. That's what people don't want to hear, honestly. They're supposed to have a good appraiser. Do you have a good appraiser for the real estate? Do you have a good appraiser for this or that? Do you have the assets appraised properly so you can insure them properly and have them insured properly? Of course, it takes money to make money, but this is private equity. They understand they get charge points to hold the money. That's why they're trying to buy things with it, buy assets with it. They get charge points for holding the cash. Private equity gets charge points for holding the cash. Oh, they don't trust Christian? What? First of all, they get paid to return capital. Not to get, oh, we just trying to collect fees for money coming in the fund. Think about that. That's what they do in the public. Are you doing that in the private? No. In the private, you come to the table with what you got, what you have. You come to the table equal, private, circle, pie, equal. The public, oh, we coming in fractionalized. We coming in hypothecated. We coming in with new words in the dictionary. We gonna hypothecate and multiplicate the money paper system. We're gonna scare people, make them think that we can run out of money. They can't run out of money. That's the challenge they got the public thinking now. If they could run out of money, we would already found what limit is that? How do we say that they're gonna run out, but we don't know what the limit is? If we don't know what the limit is, let's stop talking about that and focus on the growth. Because there's a lot of growth too every year that's still pacing with the spending. So then you got private equity still right here in the mix like a black cloud in the sky. And they have other equity funds as they call them, because it's just the way the fund is set up, the structure. And so, sure, private equity, they have their structure. They went in, they've done a lot of destruction and construction on industries. Then we get to the families that say, "Oh, well, Trust Christian, I got some real estate. I got my houses. So, I'm trying to consolidate them. I'm trying to collateralize." Though they try to collateralize their properties, we got this one trustee. He said, I got a few properties and I'm trying to consolidate them." Oh, really? What that mean? You trying to put them all into a commercial fund? So what you would do is if you own them all, you would get a note on them, right? And then put them in a fund, right? And then go to the bank. But hold up. What division you gonna go to the bank at? So we're gonna go ahead and talk to this trustee as if they were on the line with us. Maybe they don't even know it's them. Maybe they get the riddle when they figure out that it's them. So this trustee, I got 3 or 4 properties in my name, and I own them all. I don't have no mortgage on them. So okay, you could just go put notes on them since you think you smart. When we say it that way, we saying it's not that you want to. First of all, you don't want to be the smartest person when it comes to a security. You want to find a securities agent to write out the security. Bam. Once that's ironclad, that's like having ironclad title right there. Bam. You got ironclad title. So right there, you have it's like once again we talk about the appraiser, right? Well, okay, if you have the so-called appraiser as the securities agent, oh, looks a little bit more security. Secure. Exactly. So here we go. Hit the like and subscribe. So they hit they got the securities now in their hands. So what are the securities worth? That's more so than what is anything now, because remember you had the securities agent is we sat around. We had recently someone sent over their PPM nuts. Maybe they thought they were a flash in the pan. Maybe they thought they were, but they weren't. Oh, I sent over 100-page document to you, Trust Christian in the vault. Yeah, and I sent over a PPM. You think you gonna be able to duplicate it? Of course. It's that simple. Oh man, y'all think y'all gonna do it? I didn't think you were gonna do it because you didn't do it with me. Well, we wanted you to do it. When you're looking to build things in private in the equity, you're gonna do it through a multiple of people. Whereas in the public, you could be a solopreneur. In private equity, challenging. In the private, with equity, challenging. No solopreneur stuff. They get eaten up and gobbled up. And that's how you know you gotta lean into that private equity. You gotta lean into building a team. No matter what you do, you gotta lean into against your intuition or against your better tuition or your better thought. You gotta lean in and lean against it. You have to lean into building a team. That is the utmost important thing when you come into the private. 100%. It might seem like, oh man, Trust Christian, what's your secret to success? Trust Christian in the vault. Trust Christian in the vault. We can tell you one thing: we had the eyes of a eagle, and when we saw the wealthy environments, we got in them. We got in the billionaire rooms. We're proud to say that we're in the billionaire rooms. You got to be in the billionaire rooms. You don't want to know what it's like to sit in a room with someone that has $50 million in assets and they look like a regular guy. But then and they got to do real estate. You don't want to know that they know about basic business and stuff like that. It's too easy, ladies and gentlemen, to sit next to people that have the means and What do you think they looking at you with? The eyes of, do you have the means? The equity. Not just the paper document. Oh, I showed up today with the paper. You show it to the meeting, they're going to say, okay, pull out the assets. They almost be asking a lot of times, how much cash do you have, which means how much debt do you have. That's really what they're asking, like how much public debt do you have. They could ask you that and you could say no. So the thing about it is, if you play broke the entire time in private equity, they're going to be forced to look for the asset. If you act like you have more than an asset, they're looking for the cash now. They're looking for the cash flow. They're looking to see how fat the pony is. Whereas if you just show equity, you're showing a hard tangible asset. Could be a solid piece of property, could not be. Could be a car, could be a diamond, could be a pearl, could be something of hard tangible asset, gold, silver, hard tangible asset, equity. These even and there are some people that say, oh well, what about a contract? Is that considered private equity? In some respects, because the contract is private and it may be able to be warranted equity in the universal equity chambers, possibly. But from what we could see, private equity, two different things. So private equal equity, that's a little bit different. Why? Because once you're in the private, you're operating from an equitable position. That means you could gobble things up in the equitable position. But we already ran into something. We'll tell you another story with another trustee. Oh, Trust Christian, if I end up putting assets in the position where they're in trusteeship, what if they always, this how you know you got an employee mindset. This how you know you got a public mindset. Well, how do I get the assets back from the trust? How do you get the assets back from the trust? Let's think about that. Think about how that sounds. That's why the public is the way it is. It's because people think they could play around throwing things in and out of these type of things, trying to hide things, and that's what the public goofies know. They're not coming out to private equity. They heard their fit. Private equity's been investing away, scoring big returns. What do you think? See, this is what happens. This is how you know. Look, trustees want to be in private equity, no doubt about it. Why? Because that's where you're getting over 18+% returns quarterly, biannually, yearly. You're getting these type of returns. So of course trustees want to get to this environment so they can get these type of returns. Well, you got to have this type of money. What's this type of money? Well, usually when you go to private equity, what they say, you're supposed to always be a accredited investor. They'll tell you that type of nonsense. So you got trustees that say, "Oh, I just gotta have a 250,000, or I gotta have $1 million in equity outside of my house that I live in." That's true. Okay. They also might say, "Well, you gotta show us." Okay, even if your proof of funds is $250,000, that's what they might take on that investment. And see, that's another thing. See, we could sit here and say from a trustee perspective, like trustees be getting their shirt handed to them for sure. Like a lot of them be losing money in investments, and like the thing about it is, we think you just got to be able to gamble on yourself as a trustee in the beginning, and for a while, you have to be able to bring the capital in directly. You have to be able to do that. You can't depend on outside means. That's one thing we could say for sure as a trustee. As a senior, you get to that point in your career where, and as a trustee, just overall, that you understand that equity is the highest thing. So you end up just focusing on making sure that whatever you're doing, you get some level of equity out of it, and that's ultimately what it comes down to. Just somebody said, do we have anyone that goes into decentralized finance? Decentralized. So let's talk about it. Is that public or private? If you want to have a conversation, let's have a conversation. Because, first of all, it's funded by private equity. But the thing about it is, everything on the internet can be hacked. Can we agree to that statement? Like, let's have intelligent conversations out here. The government gets hacked, so anybody could be hacked. So, are we under the fair assumption that anyone can be hacked? Like, they have these coins. That's why the coins haven't lasted because they can be hacked. And that's why the government's on it now, because the government's on it and they figure they can do a better job. The government, if they figure it out and they approve it and their coin is still bad, but people are still going to be okay with it, just like they were okay with the other bad coins, people skimping and scamming. They had a whole debacle behind a whole exchange that literally just got over with 1 billion. What makes you think the gov couldn't get off with a few billion leaking out of their closet every year? This is the environment that we're living in. You would want private equity to stay active in this space, but instead the govs has dipped their hand in this cattle bag for sure. And as you can see, it's on the internet. It's tied to a public domain, okay? And so once again, let's talk about that. Because we could say, if there's somebody saying like, okay, there's private, we know that there's the thing called the dark web and all that other stuff. But are y'all talking that? No, that's why it's so sophisticated. That's why it's so complicated. Because it's in the dark web. And with the dark web, that's where they making money at. In the public, people think they making money. In the private web, they really making money. See, this is what they don't want to talk about. They don't want to talk about the dark web on the public side. Why? Because the dark web's deep. It's deeper than deep. It will make people get off the internet. And they would try to do something about the fact that there's wild things going on the dark web. But they're not. That's where the decentralized finance has gotten its hands a little murky. Why? Because it's in the dark web. And in the dark web, guess what? That's where the predators is at. That's where all types of things is going on. But they can't talk about it in the public because they don't have a gut. They don't talk about the dark web every day. Why would they not? The dark web is what's really bullying. They want to talk about the public stuff. The dark web is they know your address as they're typing to you. That's the dark web. What are we talking about? But they want to talk about the public web. Oh, the public is decentralized. How is it decentralized? It's not the dark web. And even the dark web hackers can hack each other. Like, it's interesting to know somebody hasn't really tried the government, which they have, but there's not too many that are that stupid. So it's not that they can't go in and hack any company, but the hacking has to be sophisticated. Oh man, we're gonna do sophisticated decentralized finance. Think about this. If you was private, why would you want to take your money and put it on the internet? In a key code. Now, if you making money supposedly in the public and you want to convert it into a secured platform that what? It's not going to lose to inflation. It's not going to what? What is the money not going to do? Or should you be converting it to private? But oh no, no, secret is kept. Quiet is secret is kept. Guess what? We gotta take their private gold, the gold that's in hard tangible form, make them spin that out, put it into debt notes, and then give it to us so we can steal it off like Sam Friedman did. What? It's like 5 or 6 major companies. Oh, hold on. We'll do 20. Oh, they're all out of Silicon Valley. They're all out of an Asian fund. They're a Dubai fund. They're a Saudi fund. Oh, yeah. Oh, yeah. They're investing in what? Decentralized finance, right? Right. First of all, and Saudi, They have sovereign wealth funds. Let's talk about it. They have sovereign wealth funds. Did you see them create a sovereign wealth fund that's fully whatever we want to talk about right now with this decentralized stuff? Let's go there. If you could put it in the chat, that's great. Then one of them was willing to do it. But ladies and gentlemen, we're seeing a different change in the way things are done. Okay, so we're going to read the comment because this is a dialogue. Anything could get hacked, depending on how much you understand the technology, though. Crypto technology is backed up by nothing, by code and mathematics. What? That's the internet. Don't be fooled. The way we're even communicating supposedly through a 1 and a 0. They don't even have supposedly other numbers. And we don't even get computer scientists. And we should know that. It takes millions and billions to hack blockchains. Look, once again, don't be fooled by the speed. Don't be fooled by the times. Don't let propaganda make you think that it's unhackable at the current stage. Ladies and gentlemen, it's like asking y'all, do they got the records for the companies? That's it. They had it all on the daggone on the little card, the code, the key. Think about why this hasn't caught on yet. And we'll say that it may have its way. We're not going to say that it doesn't have its way. Look, appreciate the conversation in the chat. But we're going to say this. We've seen these type of companies come and go. Centralized or decentralized. What we can say is from a private equals equity perspective, anything on the internet is a potential compromise. We know this going into the record keeping nowadays. The elite of us know. So we understand what's public and what's private. It's hard to keep things off the internet. But at the end of the day, the public, it's a zoo. They house different types of animals that people took pictures of, and sometimes they might be extinct, sometimes they not. So, ladies and gentlemen, we have to be aware that in the public, you don't have control over the image anymore. You would like to think you have control over the image. People, they like to think they have control over the image. They say, oh, we're going to talk about the money. Let's talk about the money. Not about the image, Trust Christian and Paul, but the money, the public money. Not the public image, but the public money. The public money, if it's the public Federal Reserve notes, what is private money? Is decentralized? Is that's what's private money now? Over the gold that just went to all-time highs this past week? Are you in tomfoolery? This is where the market is at. The culture is getting duped. Gold went to all-time highs in this past week in the public market as far as evaluation. You didn't have to be smart. You didn't have to say, oh man, I got to know the metrics for this company and know how to deal with this company. I got to know when to sell this asset. I got to know when to buy this asset. No, you just continue to acquire the asset because it's purely an asset. Oh man. See, it's interesting. Somebody can say, give us access to our funds or give us full autonomy to our funds. That's what I'm saying. It's one of those things like we sit in a room, it's going to be a basket of currencies. Whether it's a basket of currencies or not, you're going to be taxed based off of how you hold it. We can talk about it from a very first perspective. They said don't be fooled to know that anything on the internet can't be hackable. What are you, like, old? Only an old person would say something like that. And we not even old. That's how you know that person's old. First of all, ladies and gentlemen, it can hack the government. Stop acting foolish. This is foolish. This is how you get people type into the chat. You just want to type into the chat, have a conversation with you. What makes you, if somebody can create it, they can hack it. This is where you get someone that'll type next into the chat, oh yeah, computers will be smarter than a human. Well, okay, the way that you're speaking about it being smarter than a human, if you're talking about the average human that doesn't think the way that the computer's going to think, sure. Decentralized, no. That means they're trying to take money off of the so-called, what is that, what is this, Federal Reserve System. They want to take it out of the government's hands. The people supposedly do. Well, if they did, how come they didn't get behind one coin yet? We're not literally calling out the coin literally. How come they didn't get behind one yet? Because remember, the money is supposed to be the full faith and credit of the people. But this is where you get, we're not even going to have a hard conversation with whoever's typing into the chat. Because the way that they making it sound, first of all, if it's decentralized because they're taking money off of the normal system, which is if you have a dollar, right, and you take it out of the dollar system and you have it in the Bitcoin system now, it's not a dollar anymore, correct? Correct. It's a Bitcoin bit, whatever it is. So you can take that, it's in your hands supposedly, and you can convert it into another coin. Does that mean it's a dollar? No. It means it's whatever denomination somebody derived and delivered as a derivative, as a monetary instrument for exchange. I mean, we could talk about it very sophisticated, and then we could talk about it from like, some like, oh, we're just talking about it from the blockchain, hit you from the block and the bullshit. And no, it's not. First of all, if you're taking away currency from one country and then you're doing it to another country, they take it through exchanges, right? So they have an exchange rate now, and supposedly they have fees attached to it. That's fine. So that actually is a form of regulation. You have to have an exchange fee to exchange out of the currency. This is how you know they're weak body right now. Because if they could stand on their own 2 feet, which they can't because they don't have real financiers with these companies, because if they did, they would have money behind their money. See, when you deal with a bank has money behind its money. It has an insurance company behind its money. It's not just the depositors. They buy bank-owned life insurance. Go look it up. They buy mortgages. They create mortgages. So, so they decentralize the money. Uh, how? So there's a few reasons we don't think the dollar's going to lose its power, and we've seen the dollar recently having a situation go on, but a lot of people don't understand. Oh, the dollar's going to go down. First of all, if you live in a country where the dollar is your predominant country the currency, what currency are you going to next? The your dollar? Because how much is your dollar worth internationally? This is the hard reality for people that say I'm private equity versus being public debt. Because public debt wouldn't be bad then. But it could be if people not accepting it. But if they accepting public debt notes, they got Federal Reserve notes attached to it. Why not give it away? Oh no, trust Christian. I don't know if I can do that. Exactly. They don't know how to do that. That's all. So they're begging for private equity to come in and give money to them, and not doing it with more than 1/3, because that's what private equity is asking for. It's interesting, we think about this. This is a harsh reality because if somebody says, oh, I know how a bank works, right? You say, oh, I know how a bank works. Only a genius would go start a bank, right? See, we don't claim those things over here at Trust Christian and Vault. We're aware of how a bank works, but we don't really know how a bank works. Because if we do, we would have it. It's the simple as that. It's supposed to be a money machine, right? Right. But what happened? It had a lot of regulations attached to it. Oh, really? That's what it is? They got a lot of regulations to what? Taking public people's money and making public people think that they own the bank because they deposit money at the bank. Really? Oh, okay. Does that sound like a credit union? So there's various different levels of a bank. But most people, they're not going to go start a bank. Just like the decentralized finance situation. All they did was create an internet number. It has more numbers. It is supposed to be more encrypted because it takes more power to create a code and break a code. Okay. Well, there one time was only handguns. Then they went to rifles. And then they went to submachine. And then they have things called machine guns. There's a difference. See, and this is where we appreciate the conversation for somebody typing into the chat, for sure. So just to let you know, when you say autonomy over your assets, when you say over your assets, what assets are you particularly talking about? Now, so if someone owns a house, should they own the house through the internet or should they just have the private document through a private deed? Like that's kind of how that works. Like what would be the benefit of owning assets through the internet supposedly? And once again, through the program that we work with the trustees, it wouldn't be necessarily in their own name. So that's how that works. You wouldn't have the asset in your name. Full autonomy as to give them to get a self bank with ourselves. See, this is the thing they don't want to do. This is how they know they tricked you. Why would you want to be your own bank? Now, you think about this. If some of the most powerful banks are credit unions, which are usually like union-based type, banks. They got it's a bunch of people. They used to work the same job. They worked at they banked at that bank, so it's called a credit union type environment. Like it's not exactly that, but y'all get the point. The point is that there's a lot of people that have the same craft trade. They bank with that bank because those banks were traditional. Like they weren't always called a regional bank. They were like smaller banks, so they would be able to cater to the people that were coming in for their industries and getting loans. They would literally make loans to those industries. So once again, if you become bankable, what industry are you? Marketing? Are you construction? Are you technology? Are you coding? Are you writing? Are you media? These are the things that you gotta ask yourself. We're not saying credit unions are not centralized. If you first of all, okay, first of all, that's like saying you cannot use the credit union concept in the blockchain concept. Centralized banks like Wells Fargo's don't allow us to self bank. And you think about that. You calling this self banking. Self banking, that means you private equity. What equity are you? What equity do you have? Oh, well, I put a debt note in here. Right? It's a debt note. It's not a positive note, is it? Let you tell it. See, these are the questions that they have to ask themselves about what is a bank. It's okay. It's okay. Oh man, the banks pulled the number on all everybody. No. Do you know how it works? Oh man, Trust Christian, you don't know. You're an agent. You don't know. All right, fine. No worries. We won't keep talking about it then. Centralized banks don't allow you to discharge your debt. Why would they do that? A centralized bank, you don't work for a centralized bank, and a centralized bank doesn't work for you. See? See how we can have those conversations with you all? If you guys wanted to continue to elaborate on your conversations, because at one point it's going to come out. At one point it's going to come out. How are they going to let you write off discharge your debt? And then who's discharging it? You as a social security number or an entity. Oh, I can't do a collateral swap. I can't do a debt swap. First of all, if y'all only knew, we could take these questions right now and ask the attorneys that we've had on the podcast multiple times what they would say about this. And I'm not going to say they're going to laugh. We're not going to say they're going to laugh for sure. But they're going to tell you to try at your own apparel. And that's just real talk. You can't do that anywhere else on this planet. Okay, now you think about this. Man, that's crazy. First of all, if it was so easy to start a bank, there wouldn't be a lot of regulations around it. That's one. Two, if y'all went in the news right now and actually saw the banks that were under fire right now, which are under fire, and banks are always traditionally under fire, but they're under fire right now for things, it wouldn't even be a question in someone's mind like, oh, well, I don't want the banks to have centralized power over what? First of all, decentralized banking is new. It came in 2016. Okay. See, this is for the doofuses. How, ladies and gentlemen, when you could buy gold, since you could buy gold? Isn't that private money? Yeah. Isn't that decentralized money? Yeah. Can't you take that money to another country and go into their currency? Yeah. But y'all let the doofuses run the internet. This is what happens when y'all just let people just talk. But when they come around people like us, we don't need to shut up. What we need to shut up about? The private equity is the private money, not the money that you got to take through the internet. And it's only good through a thumb drive or through a key that you can lose. And then someone said attorneys aren't educated on this. Because the attorneys, here we go. Let's talk. Let's talk. Okay. So someone said, they said the attorneys are educated. The attorneys are slightly not trying to touch it. You want to know why? Because it's hot sticking dynamite. You want to know why it's hot sticking dynamite? Because it does go against traditional banking. Why? Because they go to the regular bank. You're right. So that means that their clients can come to them now and just discharge that. And that's all they're going to run up on them up. Now, attorneys, this is what they would do. They would just have people come to them for a discharge, a credit swap, or a debt swap. Who's going to write the paperwork for the bank? The lawyer is. But somebody's going to sit here and say, oh, well, the attorneys aren't educated to the concept. We either educate ourselves in this new technology or we stick out the old ways. Nah, ain't no attorneys. Attorneys can't touch it because they operate. Okay, so here we go. First of all, are you operating like a bank? And most people aren't. So we're going to have this conversation. Let's talk about it because it's getting a little pansy-antsy now, about this whole, you're trying to operate like a bank. And, okay, if we're going to operate in the public, we're talking about debt once again. So debt traditionally can be, whatever those terms you want to use. We're not going to say that it can be. We're not giving financial advice, legal advice. We're saying that, so it says, it's a discharge. You can collateral swap. You can do a debt swap in the public. So can you do that in the private? You think you could do that in the private? You think you could tell somebody, hey, I'm gonna do a collateral swap? First of all, in ours, so y'all want to talk like I'm not sitting in here with the billionaires and we telling each other not to do collateral cross collateralization. That's how we talk in the private. So who y'all talking to? We sit in the back telling our constituents to not cross collateralize. And then they got goofballs in the public. You should do a collateral swap. Did you hear that? What the F is that? What the heck is that for the people? Hold on. So we're in the private, Trust Christian in the vault. We're sitting around the billionaires, the millionaires, whatever you want to call them, the centimillionaires. Okay. We say, one of the mentors, we could tell you another term he said, but we got the one term for sure. He said, don't cross collateralize. Don't do anything with collateral. They're like, hold on. We over here, look, we had to stay around the fire late. That means after the event's over, you stay late to find out what he meant by not collateralize the assets. Because no one else in the room took note of it. They all sitting there goofy eyed when the billionaire's telling them don't collateralize the assets. Oh, yeah? Yeah. Okay. So, what about the other stuff? We over here discharging the debt. First of all, discharging debt traditionally is in bankruptcy. If you're doing a debt swap, what are you swapping out debt for? This is how you know you don't know what a bank's for. Because if you knew what the bank's for, you wouldn't go to the bank and ask them to do that. They wouldn't be doing collateral swaps. Banks, the traditional banks in the public, we should be happy they aren't doing collateral swaps. If they were doing collateral swaps, most people would be going in and losing their shirt, and the bank would be winning out. Why? Because the bank would be like the casino. They wouldn't lose most of the time because y'all say that they don't have anything in the first place. So how can someone that puts up nothing ever lose in the first place? They traditionally won't lose. When they don't put up anything, they won't lose anything. So that's why they're mitigated on how they actually allow they're allowed to actually do certain things. They're allowed to even go do what someone else is supposed to. Oh, they're allowed to take money out and make loans against the money. This is the information they give out in the public, ladies and gentlemen, and we'll leave it at that. And then this is why there's an argument over this decentralized conversation right now, because it's a circle, but you see who's winning. It's like one of those conversations about oil. Oil's not going anywhere. Oil's not going anywhere for the next 50 to 100 years. Sorry to tell you that. Because just like you're visualizing your family estate, the people that are running the oil, they visualizing their family estate on oil for the next 50 to 100 years. And don't think they not. Supposedly they stockpiling it. See how they think? If somebody only knew that there's a system, okay? And there's a public system and there's a private system. The public system thinks that someone's in control of their life. They don't really have control over their mind yet. We just gonna go ahead and say it to you just like that. Y'all might think like, oh, trust Christian in the vote. Tell us the secret. Tell us the secret. The secret is what everybody that's in a wealthy environment knows. You gotta control your mindset. Once you control your mindset, you control everything else. So just because somebody, first of all, how is it that a melanated group of people can get duped over by a internet sensation, by the person that supposedly created the internet sensation is not even known for it? So whatever Bitcoin creator, Samashioshi, whatever his name is, people don't even know who he is. These melanated people, they're supposed to be so spiritually connected, they didn't even put that together. So they already into this whole let me lose my wealth action again. instead of focusing on the real. Do they own land? Do they own gold and silver when it's going up in price? But instead, how many melanated brothers and sisters lost their money through FTX? That's called a wealth transfer. You don't get that money back. But oh no, Trust Christian, you talking too loud now. What you mean? They just lost the money. It was like gambling. Did they get their money back? Did they get a refund? The melanated brothers and sisters that put billions in? No. Talking about if it's centralized or decentralized. People don't even understand. You can start your own family bank. But why didn't they start their own family bank, Trust Christian Revolt? Because they don't want to be regulated like the so-called centralized currencies or decentralized currencies are having to do. They're having to create regulation in order to operate in the public because that's what they're doing. They've already gaffed enough people out of money, which is still going to be more people they gaff out of money, but they're going to become a public security, be a public regulated security. That's what happens. Like, why do we keep circling back to that? That they're going to be a public regulated security. We're not saying that it's not a commodity either. We're not saying any of that. Like, where is that conversation going? It's just, okay, they think they're going to put the dollar bill out of business. For all of y'all that's American, they think about your housing value. If it's not, what happens if the banks say we can only honor denominating the houses in dollars, not in any other currency, through a mortgage? These are the things that people have to be prepared for. Oh, but I want to bank on myself. So when you bank on yourself and the housing price goes up, and then what makes you think the government's not going to give out subsidies to keep making the housing price go up? So then your coin is not equal to what the house still costs. This is interesting to see. So they want to talk about holding assets. Why don't they want to hold gold and silver, Trust Christian in a vault? Because this is what happens in the public. We sit in the room with private billionaires. It's not to say that they're not putting money in this. It's just not a priority. Simple as that. It's not a priority, Trust Christian in the vault. Oh, it's not? Not at all. Like, what are they? What is this? Like, is it a money? What is it? A commodity? I mean, people are still fumbling around about what type of asset it is. Is it money? Is it this? Is it that? Somebody said it's not a priority yet. Look, once again, if it's a priority because the government has control over you now being bankable, sure. But right now, it shouldn't be that big of a priority. It should be kept private. But instead, there's going to be more regulation to come because it can't stay that way. It's got to go more public because there's going to be more money that's going to go into it. And it's going to steal more money from people. And that's how that works. Because they're trying to claim that they're a money. Are they a money? Are they a commodity? What are they? See, gold just sits there where it's like this. This is a little bit more amorphous and what people will call untraceable or non-traceable, or it can become untraceable at one point. It can be taken off the grid. Then when you talk about decentralized control over your asset, not having it on some type of internet code, sure, but once it's taken off, there was some type of there was a trace. One. And sure, you think the govs want that? You think the powers that be that had those currencies want that? But oh no, it's gonna be a whole bunch of smarter people that's gonna outsmart the World Bank. What are you talking about? Most of the countries are in debt to the World Bank. Did we not talk about that? Oh, they don't talk about that in public school? They don't talk about that in public school? Most countries are in debt to the World Bank, to the IMF, to the Bank of International Settlements. What people need to understand is once we put it on the internet, it was public. And once it's not on the internet, it's private. And as long as we can understand that, we'll have high levels of privacy, high levels of separation of powers, and high levels of integrity because the lines will be very clear. Right now, the lines are not clear at all. When you're in the public, you almost have to wear sunglasses. Why? Because in the public, when you're in the public domain, it's challenging to own assets in the public domain. We could blame it on the government or we could blame it on the people. We could almost I would love to blame it on the people. If it was just trust Christian involved, I would blame it on the people. They have read this book called 1984 by George Orwell. They have read Orwellian principles, and so they are very comfortable with cameras taking pictures of them being in this society, and there is no rule of thumb of how people's pictures need to be blurred out in the background, and people's public image cannot just be used without their consent. Simple as that. We are living in that age right now. We're in that age. It's the simple truth, the harsh reality, but the Orwellian principles are alive and well. People are in an environment where they think because they have a camera phone, it's public, and because that's not it. That's not it at all. Just be sure. There's things that if okay, for example, if you want to be a witness to a crime, then you have to stand for your evidence. The camera can't just stand for the self. So if someone's going to record a crime, then they have to go to court for it. Those are small things that should be a part of the system or integrated in the system that say the technology is not being abused. Why? If you're recording people that are and bad things happen, that's evidence in a suit. That should be subpoenaed to the suit. And if you're a part of the suit because your material is a part of the suit, then it should be a part of the suit. You're a part of the suit. We're living in an era now where people will not take credit for their phone, of course. Oh, my phone, it just captured you, and that was that. Like, what? That's where we are. So they think, oh, well, because I'm in the public, I can record everything in the public, and everything in the public domain is up for grabs. In all actuality, now you guys have to be prepared that oh wow, we can that's really what's going on. Yeah, it's like we gotta wake up. That's what you gotta wake up to. You talk about being awoke. You gotta be awoke to the fact that yes, oh, there is no privacy supposedly, and we you can I could record anybody I want if you're outside of your house. Like what? Where's the equity in that? Where's the equity inclusion in that? Where's the diversity in thought in that? So this does come to a halt. It does come to a order, but this what happens when you're in the public, ladies and gentlemen. We already just told y'all what it is. It's a zoo. It's a free for all in the public. That's what's going on. It's a free for all in the public. Bottom line. And you gotta make it happen, ladies and gentlemen. That's the bottom line. It's crazy to know that like that's the way the public is set up right now. That the pictures people take, they could just take pictures of you. That's where we are. And you gotta own, or your family estate has to own a name, image, and likeness. That's true private equity. That's true equity inclusion. That's true equity enforcement. And just to hammer home on the conversation about this whole centralized or decentralized or crypto and all this other stuff. Look, we're gonna tell y'all something. See, wealthy people, we like to play the easy game. Now you could be a hardhead. You could think you Steve Jobs or somebody, Zuckerberg. You gonna revolutionize technology. One thing we know, two things for certain. There's just some businesses that are cash cows. Sometimes you gotta focus on just making sure your family's wealthy. Cause sitting out here trying to fantasize about these different emerging technologies when your family could be wealthy, multi-million dollars, Come on now. Keep it simple. Look forward to seeing families at the workshop, Christian at trustchristian.com. Once again, Christian at trustchristian.com. Looking forward to seeing y'all. Peace and joy.